9, 8, 7, 6, 5, 4, 3, 2.
Hey, Wilberforce here, the owner of Power of Mindset Yields. AI is going crazy these days with amazing projects being delivered, including in trading. In this video, I have used a female voiceover to explain what I have to say, but after 7 minutes, don't be quick to go, as I will briefly summarize the entire process of using forecaster tools to give you information to build a statistical edge, not as a signal. I also show you the coin I spotted and validated on Binance. It came out with 98.4% target in just 1 month. Let's go.
You know, with everything going on in the world of AI, the one question every single trader is asking is this: can it actually give you a real mathematical edge in the markets? Well, the answer is yes, but probably not in the way that you're thinking. See, we're not talking about some magic crystal ball here. We're talking about a powerful tool that helps you build a high probability statistical advantage. Okay, let's dive right in. So when you first get your hands on a powerful AI tool like Forecaster, it is so easy to get swept up in the excitement. I mean, you see reviews just like this one, you see these incredible potential results, and you think, wow, I finally found the holy grail of trading. It feels like you're getting a direct line to guaranteed success. And why wouldn't you feel that way? Let's just take a real-world example. A little while back, the crypto token FETUSDT, it shot right to the top of Forecaster's projection tool. And get this, it had a 100% historical probability and a 5-star robustness score. That meant that historically, every single time this exact price pattern showed up, a big rally followed. I mean, on paper, it looked like the perfect can't-miss trade. But then, something weird happens. You take the trade, right? You're expecting this quick move up, but instead, the price just goes sideways for 2 weeks. So you check the tool again, and FETUSDT has completely vanished from the top of the list. What happened? What went wrong? Is the tool broken? This right here, this is the exact friction point. You see a prediction change, and it just feels like the tool is totally unreliable. It's this huge source of confusion, and it makes you question whether you can even trust the data anymore. But what if I told you that this isn't a bug? What if I told you it's actually the tool's most important feature? The key, the absolute key, is to understand the difference between a static trading signal and a dynamic statistical probability. See, amateurs, they want a tip sheet that just tells them what to do and never changes. But professionals, they demand a tool that adapts to the live market. This is the crucial mindset shift we have to make. Think about it. A static signal is basically a set-it-and-forget-it tip. Dynamic probability, on the other hand, is a live analytical engine. It is constantly recalculating based on what's happening in the market right now. Professionals don't want a tool that gives them old, outdated information. They demand one that tells them the truth, even when that truth changes from one day to the next. And this is the bottom line. When FUTUT started just ranging sideways instead of rallying up, its real-time price action no longer matched that historical winning pattern. So the tool's job is to report that change. By removing it from the top of the list, Forecaster was doing exactly what it was designed to do. It was telling you, hey, listen up. That high probability edge we saw, it's not here anymore. It is shifted somewhere else. So how in the world does this work? Well, think of ChatGPT. It analyzes a sentence you type and then predicts the most statistically likely next word. The pattern projection tool does the exact same thing, but for price charts. It takes the recent price action, you can think of that as the chart's sentence, and it scours history for identical patterns to predict the most probable next move or the next price token. It's not magic, it's just incredibly powerful statistical analysis. Okay, so we get the philosophy now. The tool gives us dynamic information, not static signals. That's great. But now, how do we turn that information into a concrete, repeatable strategy for swing trading? How do we go from just guessing to actually executing with a real statistical edge? Well, it all comes down to a 3-layer validation process. It's pretty straightforward. First, you use the AI to spot a high probability opportunity. Simple enough. Second, you validate that idea with another separate layer of data. And third, you check the broader market context to make sure you're not trying to swim against a really powerful tide. This is the blueprint for making solid decisions. All right, now let's see how this actually works in practice. Let's get our hands dirty. We're going to walk through how a professional layers these tools together to build a really robust, data-driven case for taking a trade. Remember, this isn't about finding one single signal. It's about finding multiple, independent data points that all point in the same direction. Step 1 begins with the Quantum Screener. This is the AI tool that scans the entire market for opportunities for you. Think of it as your high-level filter. You're not just looking for any old idea, you're looking for the best of the best. Assets with super high historical win rates, strong correlations, and that 5-star robustness score, which confirms the pattern is statistically significant. So, once you've spotted a promising opportunity, you move to step 2. Validation. And one of the most powerful ways to do this is to check for alignment between two different tools. Does the AI's pattern projection agree with the long-term historical seasonality data? Because when they both tell you the same story, your confidence in that trade idea just skyrockets. For instance, let's say the pattern projection tool finds a setup with a 71% probability of a bullish outcome. Now, this is based on finding 14 instances in the past where this exact pattern appeared, and 10 of those times price has moved higher. I mean, that's a pretty strong piece of evidence all on its own. But then you layer on the seasonality analysis for that same asset, and you find that historically, this exact time of year produces an average return of 8.4%. Now, that is the power of confirmation. You have the short-term pattern and the long-term seasonal trend in perfect alignment. You've just built a much, much stronger case for this trade. And finally, step 3 is the market health check. Because before you pull the trigger on any trade, you have to know if the overall market is healthy or if it's sick. And you can do this with the sector map. It's kind of like giving the market a physical. Analyzing the financial sector is like a blood test for the economy, and looking at consumer cyclicals is like taking an X-ray. So why does this matter so much? Well, because a healthy market rally is broad-based. It's got legs. When both financials and consumer cyclicals are strong, it confirms people are confident and the economy is expanding. But, and this is a big but, if the broader market is hitting new highs while these key sectors are weak, that is a major divergence. It's a huge warning sign that even the best individual trade setup could fall apart. So you have the mindset and you've got the 3-step strategy. How do you make it an unbreakable habit? You build a simple, professional daily routine. This is what turns all this theory into consistent execution day in and day out. And a professional routine can be this simple. First, check the economic calendar for any high-impact news. Second, scan the rankings to see how probabilities have shifted overnight. Remember, that's valuable information. Third, journal every single trade. And finally, actively manage your risk on any open positions you have. And that brings us to a really powerful risk management feature, the break-even engine. This is a tool that helps you automatically move your stop loss to your entry point once a trade is in profit. Honestly, this is the ultimate way to manage risk in a dynamic market. It protects your financial capital and, just as importantly, your psychological capital by ensuring a winning trade can't turn into a losing one. So I guess the final question is this. Are you going to keep chasing the illusion of a static, perfect signal that never changes? Or are you ready to adopt the professional mindset and start building a real, dynamic, statistical edge that adapts and evolves right along with the market? The choice is yours.
Indeed, the choice is yours, whether you're going to continue relying on signals or building your statistical edge. So earlier we had forecasters feature called Quantum Screener, which looks like this, which has been revolutionized into another feature called Combo Screener, which is integrating 3 powerful tools. And if you come here to the dotted box, you're going to find the Combo Screener here. And once you open it, you can see it is integrating 3 powerful tools, which is Seasonality, Pattern Screener, and MMM Divergence, which is Market Mode Meter Divergence. So this is the very tool we used. I have said that earlier it was called Quantum Screener. So you come here and you select all instruments, and for me by that time, because it was on 13th December 2025, I selected cryptocurrency. We saw that it ranked number 1, FETUSDT. Okay, so this is the coin which was having a robustness score of 5 out of 5, 100% probability, which means it was telling, the price action was behaving exactly like 3 years ago, which was 2022. So this is the coin we analyze, which is FETUSDT. And remember, we are trying to spot the best trading opportunity in cryptocurrency, and I used Binance Exchange. Okay, so when you come here, we analyzed everything. This is the article version, and I came here on Binance. I want you to see, be following the dates. When I move this across, you follow the date. It was 2025. So we were here, you can see this is when the asset, which is FETUSDT, a crypto coin, was predicted to first drop down and then rally up. Okay, according to the projection, it was supposed to reach or drop up to 0.19, and it is exactly what happened. If you can watch this price action from the left, then after, when it dropped up to here, it had to go into a range. So this range caused the asset to disappear from the top list area as we had predicted. When this range happened, it was not matching with that price action of 2022, and this caused the coin FETUSDT to disappear from the list. Okay, so this is what happened. I expected the price to reach at the bottom for 2 days and then rally up, but it had to spend 2 good weeks ranging and had to rally up. The target was supposed to be 0.32, but we managed to score 0.314. Okay, and that is what I said as 98.4% target. So this is what I'm trying to explain, because everything I was taking screenshots. I even wrote the article version when I was taking this trade. When we came to the projection tool, which is currently called pattern screener, this is what I was telling you. The current price by that time on 13th December 2025, the price action was on 0.24 and predicted that it is likely to first drop up to 0.19, and we saw that one. Then it will rally up at 0.32 if you take this, if you measure this one. So this is what I'm trying to show you, because this is a before, and when I take you to the price action currently, I was showing you to the after scenario what exactly happened. So if you don't understand, like when the price action currently changes, behaves different from what it was behaving at the previous season, then it will be pulled off from the listing, where you got the opportunity.